Headed to SoFi Stadium? Skip the traffic and ride the Culver City Bus Line 99, the SoFi Express, your direct $2 base fare round-trip ride from the Culver City Transit Center at Westfield, Culver City. Buses run on weekend game days every 20 minutes starting 3 hours before kickoff, with return service beginning at the start of the third quarter. And guess what else? We're hiring. Join our team and help keep the community moving. Visit culvercitybus.com or call 310-253-6500 for info on your next ride to the game or maybe your next job.
Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air. I'll be back on at 6 again this evening, and every Thursday evening at 6 with Mark Hood, the CEO of the Union Rescue Mission, for the Just Help One radio show and podcast. Right now, it's Mottek On Money. Live on the air, 790 KBC, streaming live online worldwide at kbc.com, and, of course, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, and all your favorite podcast platforms. Rough day for stocks and crypto, but another banner day for gold and silver, hitting record highs. Stocks pulling back today as a U.S.-China trade war dragged on. Loan losses at some regional banks also hit that sector today. Continued concerns over credit quality. The Dow coming in for a closing loss today of 301 points at 45,952. We see the S&P 500 down 42 points and the NASDAQ down 107. The volatility index, which has been all over the place lately, spiking again today, up 23%. The yield in the 10-year note hovering close to 4%. The tech-heavy NASDAQ flipping from early gains to a loss today. NVIDIA and other AI-related stocks did move higher after a chip maker TSMC's stellar earnings news came out. We see NVIDIA shares moving higher today by just about a couple dollars at 181 and change. We did see investors going into the 10-year Treasury, yield dropping below 4% today, so that is certainly big news. Gold, meanwhile, above 4,300, in fact, making a run for 4,400 an ounce. You heard it here first. See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KBC. I'm looking at the price of gold of about $70 here at the moment at $4,374.20 an ounce. Silver blew past 50 an ounce earlier this week, blowing past its previous record high last seen back in 1979 and 1980. Silver right now at $53.56 an ounce, up about 26 cents here at the moment. Another choppy trading day today, despite hints of coming Fed rate cuts and, on balance, pretty good earnings news from various banks. Regional banks, though, coming in the spotlight. Zions Bancorp and Western Alliance shares moving, plunging, as a matter of fact, moving lower after both disclosing problems with loans. Haven't heard about this issue in more than a year. Chip stocks moving higher, as I mentioned. We'll take a closer look at that. And U.S.-China trade frictions, again, in the spotlight after President Trump confirmed that tensions with China remain elevated. I will discuss the latest important news related to U.S.-China trade relations and the whole works later this hour with China expert Gordon Chang, senior fellow at Gatestone Institute, author of numerous books on China, including Code Red, China's Plan to Destroy America. And on X, he can be found at Gordon G. Chang. Tariffs impacting the car business in a big way. Automakers will pay nearly $11 billion in tariffs on vehicles and parts imported to the United States from Canada and Mexico through the first 10 months of this year, according to a new calculation. Meanwhile, Stellantis, the parent company of Jeep, Chrysler, Dodge, and other brands overseas, plans to invest about $13 billion in the U.S. auto manufacturing operations over the next 4 years. That is big news. We'll talk about that with our go-to car expert, Lauren Fix, later this hour. And another fly in the Chardonnay, of course, the U.S. government shutdown entering its third week. And today we did hear from the Fed chairman announcing that the Fed will soon end its balance sheet reduction program known as quantitative tightening, or QT. But this policy shift is not the bullish stock market driver most investors believe it is, according to some analysts. We'll talk more about that here as well. In fact, let's bring in veteran market watcher and financial journalist Matt KRANTZ, finance and management editor at the authoritative IBD, Investors Business Daily. He's also the author of books including Investing Online and Fundamental Analysis for Dummies. Matt KRANTZ, thank you very much for taking the call live with us here this afternoon.
Thanks for having me.
Great to speak with you, Matt. It's been a while since we chatted behind live microphones. What a year it's been here, middle of October now. And, of course, we've seen a record run-up for the stock market. And then since last Friday, when the China-U.S. trade discussion reared its ugly head once again, we saw that sell-off on Friday and then a bit of a rebound. Crypto's also taking a hit. In the meantime, precious metals at record highs. Give us your latest view of this latest market action here.
Looks like fear is coming back into the market in spots. So if you look at the dollar is weak. Interest rates are falling. Gold is soaring. People want to play it safe, except with technology. Technology is still, believe it or not, the number one sector of the 11 sectors this year so far. It's up 22.4%. So I think what's going on is AI is holding everything together. But people are starting to get a little nervous about the AI trade. So that's starting to cause some issues. And now the fear of banks, just the word of a bad loan is enough to scare anybody. And it sent all the bank stocks down lower today. And it's not what we want to go through.
Yeah. Remember, what was it, almost 2 years ago now, I guess, certainly more than a year ago when we had those banking issues and some more shotgun mergers, right? When the banks were taken over, First Republic, for example. What is the story with the banks here, and what are you reporting there in Investors Business Daily?
Yeah, so we've had a long period of a lot of loans, a lot of loan volume, a lot of low interest rates, and I think people have thought that that's kind of covered up some problems, and that was apparent today. The iShares U.S. Regional Banks ETF, which tracks banks like Zions, collapsed 5% in just one day. Mm-hmm. But what happens with banks is they're all interconnected, so people start to worry, well, if that bank did this, then what about this bank? What about this bank? What about this bank? And it kind of spreads until we kind of get a feel for what the carnage is. But at this point, I think it was just smoke. It's not fire, but it's a fire that people have been worried about.
Right, and then there was this bankruptcy of the auto parts giant First Brands, which we haven't talked about much here. Not certainly a household name, but it looks like that has somehow impacted many regional banks. What do we need to know about that?
Yeah, so corporate credit got pretty open. The spigots were open for a long time, and the rates were really low. And I think people have always suspected that this was going to come back and haunt us. And now, with even a whisper of problems, I think people are worried that this could be the comeuppance that we've all been afraid of. Defaults have been kind of steady but rising. People have been expecting it to rise more, especially with all the tariffs kicking in. But up until now, it's just been a fear. When you have news like what you talked about just now, it's more than just a fear. It's turning into a little bit of a reality.
Yeah, and it looks like closer to home, Zions Bancorp announcing it had, a $50 million charge over two bad loans from its subsidiary, which happens to be based here in California. And San Diego, California Bank and Trust and Western Alliance also said it was dealing with a fraudulent borrower. So a lot of moving parts in all this. Anything else that you've been able to pick up here related to what's happening with these banks?
Yeah, so I think it's really waiting to see on these. So Zions, the stock went down 13% today. That kind of sends ripples through the whole system. I don't think anyone has any more details, but I do know that bankruptcies have been kind of creeping upwards according to S&P, and that's been something that's been concerning. And I think it's just something that's been a worry. And then now, like we said, it's becoming a reality.
Interesting. Remember when, and I have to look it up now. This year has flown by so quickly. So it must have been, a couple of springs ago that we had that mini banking hiccup. I know some were reluctant to call it a crisis at that time, and it turned out not to be a big blow-up that people had feared. But some of that was crypto-related, right, with some banks in the Bay Area impacted. Is any of this crypto-related this time around?
I don't think so. I think what caused issues there was really funny. That was Silicon Valley Bank. What happened was they went all in on long-term treasuries. And it kind of created a liquidity issue when people wanted to pull their money out. And I think that's a good point that you're bringing up. I forgot to bring this up. In the old days, if you wanted to get your money out of a bank, you'd have to drive to the bank, get in line, fill out all the paperwork. Now you just open the app and say withdrawal. So this has been an ongoing concern that these bank issues can turn small problems to become big problems as people can just use apps to pull money out instantly. And again, I don't want to cause concern. I don't want to say that that's going to happen, but that's the worry. And I think that's why the bank index was down so much today.
Very interesting. On there live with Matt KRANTZ with the Authoritative Investors Business Daily, IBD. Certainly anyone with gold and silver is at high cotton today. Matt, what about this tremendous run-up in gold and silver hitting a record high again today?
Yeah, absolutely. So the GLD, which is the Spider Gold Trust, it's up 63% this year. That is just astounding. Silver's doing even better. I mean, to put that in perspective, Tesla stock's only up 6% this year, and Nvidia is up only 35%. So gold is doing almost double better than Nvidia. So and keep in mind that people buy gold typically, and I know I don't want to make any enemies with people who are like the gold bugs, but typically they buy it when they're kind of nervous about the established financial system. And this has been brewing for a while, so that kind of explains kind of this simmering worry that's been going on in the market.
Right. So the magnificent one is silver, right? With that kind of gain, and platinum also seeing eye-popping gains along with gold here. What are your market monitors saying about where silver and gold go from here?
You know, that's a really tough one because it really depends on the dollar. Which depends on tariffs, which depends on balance of trade, which depends on interest rates. So there's so many variables to try to call that. I think whenever I call gold bugs, they always say gold's going higher. And it's hard to dispute that because that's kind of what's going on. And there's nothing on the horizon to change a lot of the forces that are pushing gold prices up. It is interesting to note, however, that Bitcoin, on the other hand, which is supposed to be the digital gold, is behaving not anywhere similarly. The Fidelity-wise Origin Bitcoin ETF is only up 16%, and it was down today by 3%. So people are definitely not even accepting Bitcoin for their fear. They want gold. They want silver.
Let's talk more about the cryptos. Of course, you've been following it right from the dawn of the crypto era here. It's been a rough week for the crypto folks, kind of a stomach churning week, and Bitcoin back below 108,000 here. Looks like the ball got rolling lower last Friday, supposedly on the China trade issue. What's going on here with the cryptos? And we see Ethereum back below 3,900, and the list goes on.
It's hard. It's really hard to say because it's such an interesting market. But I think what happens is people want it to be gold. A lot of people who own it say, "Oh, it's a store of value. It's just like gold." And then when it doesn't do what gold does, people get disappointed and they sell it and they just buy gold. I think that's a little bit what's going on. Also, as you point out, it's hitting a saturation point. I think everyone that wanted to own it now owns it. So it's becoming like an incremental buy. So it doesn't have the kind of the fear of missing out factor going like it used to like a year or two ago.
On the other hand, it was just about a month ago that Bitcoin was above 126,000. It is extremely volatile. We've been reminded of that this week, but things move very, very fast these days. And any other thoughts on what's happening in the crypto world here? Looks like Doge is back to 18 cents. I'm looking at it here now. Solana, which caught a buzz this year, is back to 184. I guess there was some talk about some new ETFs or anything else that's on your radar screen crypto related.
I think your point is exactly right. I think that it's been volatile, much more volatile than people want. People want the sure thing. So a lot of people don't believe me when I tell them this, but the number 2 sector of the year so far is actually utilities. Yeah, boring utilities, because it's seen as like a given source of growth because there's huge demand for power to generate for AI applications. So I think the sure bet, the dividends of the utilities are what people want more so at the current moment than Bitcoin. But of course, as you say, that can change really quickly. But that's kind of a downside of Bitcoin too, when people want stability.
All right. Speaking of boring, and this is why I didn't mention it at the beginning, a very significant move in the yield on the 10-year note below 4% today, 3.97%. That's got to be good news for people looking to get mortgages. That's the one that impacts the fixed rate mortgage rate. So it impacts real estate. What's going on here with these benchmark yields suddenly coming down so dramatically?
Yeah, actually, it's kind of the same theory. Is people want security, they want stability. So if you look at the Vanguard Total Bond Market ETF, which is a broad swath of all the bonds from governments to treasuries to agencies, it's up 4.3% this year. That's not bad. But that's just a price change. That doesn't include the yield that you're talking about. And keep in mind too that rates at banks and CDs are coming down as well. And there's a ton of money in money markets, and those are coming down. So all of a sudden, bonds for people that don't want the drama of Bitcoin or the drama of real estate or healthcare, bonds look really good right now.
Anything else you'd like to mention here about your latest articles or any big coverage there at Investors Business Daily coming up here this week?
Yeah, so what we're kind of looking at, three stocks that we're kind of looking at are Broadcom, Hims & Her Health, and Oracle. Hims & Her Health is kind of a big player in GLP-1. Broadcom is one of the Magnificent Seven and actually went up today, which is very unusual. And Oracle is turning into a very interesting stock. The founder is making big bets with TikTok and AI, and I think that's the key. We need, if you're bullish on the market, you need to be bullish on AI because AI is really, really a driving force. And unless the rest of the 493 other stocks in the S&P 500 get going beyond the Magnificent Seven, this is going to be a short-lived 3-year bull market.
Right, Broadcom is the one that has that ticker symbol that doesn't really make sense. Avgo, AVGO, it was up nearly 3. I see here today at 354 and change. And of course, we've been hearing almost every day this week about OpenAI and the different collaborations happening. Some of them unusual and involving AMD. That's another one. You mentioned Oracle and MU, Micron. And, of course, NVIDIA, too. Anything else that's getting your attention in the AI world here?
Yeah, I think just the key, I'm looking at it more macro. And when I look at the sectors, and I see technology number 1, and utilities number 2, and communication services number 3, that's Facebook Meta. That's all AI. That's what that is. And they're up by a lot more than the rest of the market. The S&P is only up 12%, 13%. Tech is up 22%. Utilities up 21. We need that to keep working because if that doesn't work, you're looking at energy that's down, consumer staples that's flat, and real estate that's only up 3% for the year. So it's a pretty top-heavy market, and we need AI to keep working or this market doesn't work.
All right, man. Well, thanks very much for coming to the line here. Another important day here for the markets, and certainly business news is not boring these days. Nothing we talk about is boring here, Matt. Thank you very, very much for joining us live here. That is Matt KRANTZ, veteran market watcher and financial journalist, finance and managing editor at the authoritative IBD. That's Investors Business Daily. He's also authored books, including Investing Online and Fundamental Analysis for Dummies. Matt, thank you very much for joining us live this afternoon.
Thanks for having me.
Right out to the freeways now, 790 KABC. Mottek On Money continues, 790 KABC. Another big day for gold and silver. Not so much for stocks and Bitcoin. Gold continuing to knock it out of the park like the Dodgers. We see gold up close to $4,400 an ounce. Yep, you heard me. Up another $70 here at the moment at $4,374.20 an ounce, hitting all-time highs. Silver also moving higher at $53.56 an ounce, blowing past $50 an ounce. The highest last time we saw that was back in 1979, 1980 or so, and has taken off above 50 since then. Crude oil futures pulling back right now at $57.51 a barrel as tensions have eased in the Middle East. Bitcoin moving lower, down nearly 300 here at the moment, just below 108,000. Ethereum at around 3,875. Solana at 184, and Doge at the moment at 18 cents. Some of the regional banks got hit today. Zion's down more than $7 at 46 and change. Oracle in the plus column up nearly 5 at 303 and change. Nvidia up nearly 2 at 181 and change. Apple down nearly 2 at 247.45. And Micron up more than 10 at 202.53. And now the latest news on 790 KABC.
Headed to SoFi Stadium? Skip the traffic and ride the Culver City Bus Line 99, the SoFi Express, your direct $2 base fare round-trip ride from the Culver City Transit Center at Westfield, Culver City. Buses run on weekend game days every 20 minutes starting 3 hours before kickoff, with return service beginning at the start of the third quarter. And guess what else? We're hiring. Join our team and help keep the community moving. Visit culvercitybus.com or call 310-253-6500 for info on your next ride to the game or maybe your next job.
Hey Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Start your day with America in the Morning.
I'm John Trout, your host.
From breaking news.
The U.S. Supreme Court with rulings. Shifting gears, Apple has released a new iPhone. Here's the Wednesday business report. It's far from a seller's market.
To politics and entertainment.
Moving into scary movie season, so why not another Conjuring movie? Shifting gears, Powerball jackpot is now the third largest ever in history.
Live long and prosper.
America in the Morning.
Fresh each day.
Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC. Stocks pulling back, precious metals higher on the latest news related to U.S.-China trade frictions. In fact, the rally in the precious metals has also been attributed to U.S.-China tensions. Gold and silver hitting record highs today on the heightened U.S.-China frictions, strengthening demand. Among other factors, of course, we also heard about some concerns about some regional banks today. And, of course, there's always the inflation worry, which traditionally has been what's propelled precious metals higher. U.S.-China trade frictions, though, back in the spotlight today after the president confirmed that tensions with China remain elevated. In fact, he told a reporter who asked whether the U.S. and China are headed for a long-lasting trade war. The president said in his words, well, you're in one now. And Treasury Secretary Scott Bessent suggested the trade truce between the U.S. and China could be extended. A lot going on here. Let's bring in the expert on all this, and that is China expert Gordon Chang, senior fellow at the Gatestone Institute, author of numerous books on China, including his latest, Code Red, Plan Red, that is, China's Plan to Destroy America. And on X, he can be found at Gordon G. Chang. Gordon Chang, thank you very much for taking the call here this afternoon.
Well, thank you, Frank.
Let's take it from the top here. Give us your reaction to this latest back and forth here, which really got started about a week ago, last Friday. That also caused that market sell-off and the back and forth between the U.S. and China on trade. Where do things stand here at the moment?
Well, right now there is the truce that was negotiated some time ago, and we reduced our tariffs down to about 55%. The Chinese reduced the tariffs down to about 30%. That truce is going to expire, but we Americans should realize that there is bound to be friction between the United States and China, because China has an economic model that requires the export of enormous amounts of Chinese products, because the Chinese consumers cannot absorb all the production of the country. And so China has to export it around the world. And they've been using predatory and criminal trade practices to aid their profits. So the United States had to do something, and fortunately we're doing something now, but it does require a lot of friction.
All right, and the rare earth metals, rare earth exports were the focus of attention just about a week ago, and today we're seeing China accusing the U.S. of deliberately causing a panic over rare earth control. Says it's open to talk. So what do we need to know about these rare earths that appear to be at the center of this latest back and forth?
Well, China mines about 68-70% of the world's rare earths, but where its monopoly is the processing of them. China processes about 92% of the world's rare earths, and these are needed for all sorts of critical applications, including semiconductors and microchips. You have them in cars, you have them in your computers, you have them everywhere. And so the United States, for a long time, has known about its vulnerability and not done anything about it until, of course, China has, in April, said that it was going to restrict them. China's had a rare earth embargo against Japan in 2010. That embargo fell apart in a couple months. This time, however, China appears to be much more determined in enforcing the embargo. And so this is going to be a little bit different than 2010. But the one thing we've got to remember, Frank, is that although we've got to buy, China has got to sell. And if you look at the balance of power in this trade friction, it is with the United States. We've got much more leverage over China than China has over us.
Now, what's your reaction to President Trump's comment today that we're in a trade war now, long-lasting trade war, when he took that question today?
Well, China has been engaged in a trade war with us for decades through its policies. The United States has chosen to ignore what's happened. And so while we talk about President Trump starting a trade war this term, or maybe in his first term in 2018, that's really just a defense against what China's been doing for a very long time. So we Americans have been oblivious, and now we're seeing the cost of being oblivious for such a long period.
On the Air Live with China expert Gordon Chang. All right, so we also heard from the Treasury Secretary today suggesting the trade truce between the U.S. and China could be extended. It looks like we're in a truce now, as you noted, but what's the next move on the chessboard?
Well, the next move is that there's going to be another meeting between U.S. and Chinese negotiators, but it's going to be very difficult. And the reason is the Treasury Secretary also talked about how the Chinese were unreliable and couldn't be trusted. And also there was a lot of criticism of a junior Chinese trade negotiator, and that certainly is not going to help the atmosphere. But there are substantial differences between the United States and China. China won't give up its predatory trade practices, and so the United States is going to have to do something. You know, we Americans have implemented misguided China and trade policies for a very long time. So it's going to be very difficult to get out of this, and there will be a lot of friction. And Americans should realize that that's the inevitable result of implementing misguided policies.
All right. I saw another headline earlier today and thought of you immediately. According to Microsoft, this is according to the Associated Press, Microsoft says Russia and China are increasingly using AI to escalate cyber attacks here in the United States. Give us a tech update on what China is doing nowadays.
Yeah, well, that's certainly true because we're seeing that China's attacks on our infrastructure are much more sophisticated and they're much more damaging. And it was inevitable that attackers would use AI. Now, of course, we're using AI to defend our networks, but our networks have generally been porous, and this has been true for quite some time. The United States needs to get serious about defending its infrastructure and the networks that protect it, and we haven't done that for some time. Decades. So this is really on us, Frank, and eventually we are going to have to spend much more efforts in defending these networks.
All right, and let's go from high tech to good old soybeans. The president mentioned the soybeans this week and reports of a soybean crisis here now. What do we need to know about the U.S., China, and soybeans?
Well, in the first Trump term, President Trump used tariff revenue to compensate farmers who had been hurt by China's refusal to buy American farm products. This year, China has not bought one soybean, and that certainly has affected prices for American soybeans. Farmers are really hurting. Some farmers may go out of business. The one thing here, though, is that, yes, China is buying soybeans from Brazil and Argentina, but that means Americans can sell to the customers of Brazil and Argentina that are not being serviced because those guys are selling to China. There's only so many crop acres that are in existence right now. So eventually American farmers will be able to sell their products. In the future, though, the problem is actually much worse for Americans, because Brazilians, for instance, can put more of their Amazon under acreage, and therefore that would shut out American farmers in the future.
All right. What are the prospects now for President Trump meeting with the Chinese leader at this upcoming summit in South Korea?
But Treasury Secretary Bessent said it's going to happen. I think, though, that we really don't know, because the Communist Party is going to hold what it calls its fourth plenum. This is going to be in Beijing starting the 20th of this month. Some people believe that Xi Jinping could lose power at the end of the fourth plenum. If he does, he's probably not going to meet President Trump or anybody else for that matter. So this is going to be something we'll have clarity on only after the end of the plenum, when we see whether Xi Jinping is in fact retained power or whether he has been sidelined.
All right. I mentioned at the beginning, gold at a record high, silver at a record high. We haven't heard too much lately about China currency manipulation, and I guess the latest report, the U.S. declined to label China as a currency manipulator in the latest Treasury report. What about China's currency these days, and what about this record run-up in gold and silver and China's component?
Yeah, the renminbi has actually gained strength against the U.S. dollar, and that's because the dollar has generally been falling. So it would be very hard to prove currency manipulation. Now, there have been many periods in the past when China clearly was manipulating its currency to gain a trade advantage and should have been designated a currency manipulator, but previous administrations decided not to do that. But right now, I don't think there's a basis for such a designation.
Gordon, thank you very much for covering all the bases. As always here, that is China expert Gordon Chang, senior fellow with the Gatestone Institute, author of numerous books on China, and on X at Gordon G. Chang. Thank you very much for joining us live here this afternoon.
Well, thank you, Frank. I appreciate it.
Thank you very much. We go out to the freeways now on 790 KABC.
Headed to SoFi Stadium? Ride the Culver City Bus Line 99, the SoFi Express. Just $2 base fare for a round trip from Westfield, Culver City on weekend game days. We're hiring too. Learn more at culvercitybus.com or call 310-253-6500.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.
The United States Soccer Federation presents the U.S. Soccer Podcast.
Searching for an inside look at the people, stories, and passion that fuel the state of soccer in America?
Who's going to be the key man for the U.S. men's national team?
First and foremost, they need to win.
There's something so fun about being the underdog.
You're playing with house money almost.
But what does this success mean for the future of U.S. soccer?
Ooh, you're getting deep now.
This is where soccer will come to life.
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC. A lot of moving parts these days in the car business. We seeing the financial impact of a collapsing auto parts giant, First Brands, sending many regional and other bank stocks to losses today. Tariffs also impacting the car business, as we've been talking about all year. Automakers apparently will pay nearly $11 billion in tariffs on vehicles and parts imported to the U.S. from Canada and Mexico through the first 10 months of this year, according to one new calculation. Also, Stellantis, the parent company of Jeep, Chrysler, Dodge, and other foreign brands, plans to invest $13 billion in the U.S. auto manufacturing operations over the next 4 years, and a lot of other developments related to EVs and regulations and so forth. Let's bring in our go-to car expert now, and that would be Lauren Fix, co-host of the Drive Car Show, syndicated radio show, as well as the founder of Car Coach Reports and big on YouTube. Lauren, thank you very much for joining us live here this afternoon.
Just to sort of wrap up that multi-billion dollar scandal that emerged from First Brands, that is Trico and Fram. We all know Trico wiper blades. They're actually based out of Buffalo, which is my hometown, and Fram, which is air filters. They're saying that the company cannot account for $2.3 billion in off-the-sheet financial transactions. Sounds like this is not going to be a company that's going to, be reviving itself. It's more likely those brands will get sold off. They've been owned by a couple different brands over the years, and let's hope that Trico and Fram continue to live on because they're well-known brands if you're looking for air filters or wiper blades. But it's a very interesting story. And then you were talking about Jeep, its parent company Stellantis, which is now owned by a Belgian car company. Remember, they were bailed out 3 times by your tax dollars. And the final time it was sold to FCA, an Italian company. And then it was sold off to Stellantis, which is like Peugeot and a bunch of other European brands. They've announced, though, some good news, $13 billion in U.S. investments. That's not making Canada very happy. There's a lot of their products being built in Canada, their trucks and their other vehicles, and now they're saying they're going to bring them back to the U.S., obviously, because President Trump's putting tariffs in place. So to invest $13 billion in the U.S., well, right away, that's going to bring back at least another 5,000 jobs in domestic workforce. That is excellent. There'll be new plants in Michigan, Illinois, and Indiana, as well as Ohio by 2029. And also, we're going to see a mid-sized pickup truck. So if you think like a Ranger or the Colorado, and the Colorado also has the Ranger, but even on top of that, we're going to see a Stellantis product, which is good. They haven't had a mid-sized truck in many, many years, and this is exciting to see a lot of these changes. Some other things that have been interestingly going on, and it's stuff that most people aren't talking about, but a lot of the people that I hang out with talk about. Actually, this is a topic of conversation. I'm actually in Phoenix today driving the new 2026 RAV4, so you'll be able to see all about that on the 22nd when my embargo lifts. But GM made a statement that a significant investment and contract commitments in their development of electric vehicles, they had to write off $1.6 billion because they were all in on electric, which I thought they did it poorly because when you look at a lot of the other brands, even Ford, they kind of touched their toes in the water. Toyota was actually very smart. They said, yeah, we'll do a partnership with GM, and then they backed out of that partnership because that's over with. It was a one-year deal because they didn't know who the next president would be. And this is all very interesting because when the government makes regulations and this government policy can change at any time, including the termination of the tax incentive and mandating electric vehicle purchases across the United States, that's going to be a reduction in demand without question. When GM was all in, they had put tons of developments in, and now that's going to impact their bottom line by $1.6 billion. And that also impacts shareholders. So if you've got stock in General Motors, you won't be getting a dividend that you were hoping for.
Right, that is very big news. GM reporting a $1.6 billion hit from its now unused EV investments. Probably the canary in the coal mine was that Hummer EV that we were joking about a couple years ago, right? When they sold 3, right?
Well, they're selling more than that now, but still.
Are they?
It's a 9,000-pound vehicle, so it's more of a vehicle you pull up at the country club and go, what are you driving? I'm driving a Hummer EV, and it is a very cool vehicle. It is not your daily driver, and it was outside the electric vehicle mandate credit. So, I mean, what they're selling now, every single brand, is you're trying to get rid of the inventory they have. So you're seeing huge discounts. So if you want an electric vehicle, you should be able to buy one. There are tons of discounts from Hyundai, Kia, Ford, General Motors, you name it. Everyone's got discounts. And some of them are as much as $10,000 off of the sticker price. You don't see that very often. So if you are seriously considering an electric vehicle, now is the time to buy one. I highly suggest leasing it, though, versus buying it. You buy it, you're going to get stuck with it. You can look at any of the sites that look at resale value on cars, and you'll see the worst resale value is on electric cars. So unless you're going to keep it till the battery dies, I would highly suggest leasing it and then leaving it behind.
And, of course, you were way ahead of the curve on all of this. The Wall Street Journal, with the headline article, the rest of the world is following America's retreat on EVs. Canada, UK, and European Union all backing off electric vehicle targets now as economic reality and consumer choice kicks in.
Right, absolutely. And also electricity. I mean, the cost of electricity in California is the highest in the country. I live in New York State. My personal electric bill, and I don't own an electric vehicle, nor do I even have a charging station at my home, has doubled. So if that's the case, and then you decide to purchase an electric car, I can promise you your electric bill is going to go up. And for a lot of consumers, that's just totally out of their budget. And we're not making up the difference at our jobs, and everything is costing more. So with that in mind, people are saying, you know what? I'm going to stick with gasoline because now that's going down. So you're going to see gas prices below $2 a gallon in some areas of the country. In California, let's hope it gets below $4 because it's ridiculously overpriced. But that's taxes, and that has to do with your governor adding on additional state taxes.
Anything else on your radar screen related to EVs, EV access, or moves to change environmental rules and so forth?
Absolutely. We're seeing a lot of changes going on. The EPA has been ditching a lot of its greenhouse gas rulings. I have a new story that's up on my Car Coach Reports YouTube channel. It is a win for new car buyers, taking away all these EPA regulations, these greenhouse gas regulations, taking away the fact that they're saying that what comes out the exhaust pipe is defined as something that it is not. And they're saying that even carbon dioxide, which we breathe, is hazardous, which is not true. So we really need to look at the reality of things, and Lee Zeldin is changing it. So it will be more reasonable to buy a car, and hopefully the money that the car manufacturers are saving, they'll put back into technology so you get better cars and lower-priced vehicles, which is absolutely necessary.
Wow. And Lauren Fix, you're getting ready for the LA Auto Show. Hard to believe it. It's next month already, right around Thanksgiving, right? You're getting ready to make a trip out this way.
Yes, and I hope to go with you to the Tesla Diner, as we promised each other. That will be a very cool opportunity. Everyone says it's worth making the stop.
Absolutely. I know exactly where it is. So, yes, you're on. We're going to do it. So thanks for we're going to mention it every time until we get there when you're here for the auto show. Lauren, thank you very, very much for that comprehensive update as always. That is Lauren Fix, co-host of the Drive Car Show syndicated radio program, as well as founder of Car Coach Reports on YouTube. Lauren, thank you very much for joining us live here on Mottek On Money on 790 KABC. And recapping a rough day on Wall Street, the Dow down 301, the S&P 500 down 42, and the NASDAQ down 107 points. The yield on the 10-year note has cracked below 4%. Gold, on the flip side, hitting record highs right now, just shy of $4,400 an ounce. Yep, you heard me, $4,374 an ounce here at the moment. Silver at $53.56 an ounce. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow, 790 KBC.
Headed to SoFi Stadium? Skip the traffic and ride the Culver City Bus Line 99, the SoFi Express, your direct $2 base fare round-trip ride from the Culver City Transit Center at Westfield, Culver City. Buses run on weekend game days every 20 minutes starting 3 hours before kickoff, with return service beginning at the start of the third quarter. And guess what else? We're hiring. Join our team and help keep the community moving. Visit culvercitybus.com or call 310-253-6500 for info on your next ride to the game or maybe your next job.